So, good day, everyone. Welcome to another edition of Performance Management. In today's class, we shall continue with our lecture on cash budgets. Of course, we have some bottlenecks. Yesterday, where we were trying to resolve, oh, this is 2%, this is 1%, and I went on a research and I think we're just missing something there, right? So of which I need to analyze that shortly, right? So let me share the entire screen so that we can see. So we'll start from the purchase. After the purchase, we'll move to the bank charges. Please, we have three questions to complete today. We can do that. Or one question, then we'll move to functional budget, please. Then we'll look for a combined question, one of the past questions there about. So we'll do a combined question on cash budgets and functional budgets together. All right. Okay. We stop at the purchases. We're having little challenges in purchases whereby different interpretations, right? But now let's quickly go back to that part of purchase, right? Now, the part of purchase, please confirm. Can you see my screen? Can you see the question? Please confirm.
Yes, sir.
Yes, we can.
Yes,
Okay.
sir.
Okay, that's fine. Now, in the part of the purchase, where is it, sir? Where is the purchase? Okay. Now, the purchase are usually 60% of the month sales. We've done that. And are paid for 70% in the same month and 30% in the following month. Less 2% in the following month. Less 2% on the total purchase price. Class. The total purchase price is the what? Is the total purchase. That is the purchase price, right? Without saying that this is 70%, what is the total purchase price, class? So the total purchase price is the 510, is the 510, 540, 75, 912, 990, and thereabout, right? Now, we're now having some challenges that, okay, this 2%, is this supposed to be now on 912, right? Now, the 2%, go back, let's quickly go back to the question. They said, and 30% in the following month, less 2%. Class, in the following month. Class, in the following month. That is where we omitted that part. In the following month, less 2% discount of the total purchase price in the following month. That is the emphasis, right? That is, so in this case now, we need to go back to the solution. Now, what is the following month of June? What is the following month of June? Is July. And the purchases, right? The purchase price or the purchases is what? 750. Now, what is the following month? Which means that the discount will be applied in the following month of purchase, right? That is what it means, in the following month, class. Now, charge 2% of 750. What do you have? 2% of 750?
15,000.
15,000. Now, 2% of 912.
18,240.
18,240. 2% of 990.
19,800.
19,800. $19,800. So what is the total purchase? What is the total purchase? The minus the discount? It means that when you buy the goods on credit, don't worry. What is the total purchase price? Now, we'll give you discount in the what? In the following months. Class, am I communicating, please? I need to confirm that. Am I communicating, please? In the what? In the following months. And that is what it is being stated, that 30% in the following month, less 2% discount. We omitted that part of in the following month. Then with our attention was focused on what? The 2% on the original purchase price. Maybe the July, which we're supposed to say, okay, June will be given, you will give discount of June in July, discount of July in what? In August, in September in what? October. Class, do we understand? Do we understand the analysis?
Yes, sir.
Okay. Ozema, are you still with us or against us?
Yes, I'm here.
Okay, okay. So please give me figure, please. Subtract, give me figure, please.
For September, 1033,200.
1033,200. Namesake, I too like you. Like seriously. I too like you. Well done. Sharp. I just need figure so that we move on, please. Next.
August, 948,360.
948,360. Please, someone should confirm all these figures, right? So what do you have? Tolulope, are you still with us?
July, 848,400.
848,400. Tolulope, are you still with us?
Yes, sir.
I know you were not in class yesterday. I know. I noticed it. You're not in class. Hope you are fine. Now, the next, we've already said this is the total purchase, the total purchases for each of the months, right? Don't forget, the question says that, okay, let me put the purchases. Please screenshot these purchases so that you give me the figure, right? So that you give me the what? The figure. The purchases. One thing about this cash budget, if you don't know it, you don't know it. If you don't know how to, sorry, you can still maneuver, but you may not get the mark, right? Allotted to each of the notes. So what is the first one? July. Total purchases.
You've already created purchases a little above under payments, and you went to create another one.
No, have I created it? Okay. You follow. Okay. That's fine. Okay. Created the column, right? Okay. So when we have this, we move to the next one. All right. The question is, what is the next question again? What is the next note? Here we have the bank charges is 1% of the total outflow. Class, the total outflow, it includes the net salaries, the expenses, the salary deductions, right? So please, you will give me figure for net for all this. I don't know if I can copy all these things. Please screenshot. Someone should screenshot these net salaries, expenses, salary deductions. Quickly, have you done that?
Yes, sir.
Okay, thank you. Now, you got, okay, the first one is net salaries. I'm coming to bank charges, right? Net salaries. So what is the net salaries for July?
720.
720,000. Next,
740.
hello,
740.
740. Please, we are with the question now. I've sent it. I've sent it to the platform. Someone too should be calling the figure as well.
770.
770. Right. So what is the next? After that, we have expenses, right?
Yes, sir.
Okay. We have expenses. Just a minute. So expenses. So what is the expenses for July?
277 200.
277,200. Next,
287 500.
287,500.
292 700.
29 what?
292 700.
700. Deductions, net deductions. July,
Is this salary deduction?
net deductions. Is it salaries deductions?
Yes, sir.
Salary deduction.
Okay,
58,
salaries deductions. I wanted to
58
write
700.
salaries deductions. So what do we have here?
58 700.
58 700. Next,
52 750.
52 750. Next,
57 050.
57
It's
050.
57 650. 57 650.
67
57 650. 650. Not 050.
57 650.
650. Yes.
Okay. Now, don't forget, we need to have what is it called? Our what? Our bank charges. Is that not so? Now, your bank charges is the total outflow, right? That is your total receipt, total outflow. You know, your payment is your outflow, right? Your payment is what? The payment is what? Is outflow, class. The payment is what? The payment is outflow, right? So we need to bring it from coming. The payment is what? Outflow, right? So from all our outflow, we can add everything together. Then don't forget it's the total outflow, right? So I can come here and so bank determination of bank charges. Bank charges, right? This for each of the month, right? This is July, August, September. Right? So please, someone should add all this together so that we can charge 1% as bank charges, right? So please, someone to add together because it is 1% of the outflow, and this is the outflow. Of course, when you want to purchase, you pay for the goods, right? Total outflow. Someone should do for August, someone should do for July, the other person should do for September. Please, quickly.
For September, 2,252.
Okay, for September, I'm coming 2,252,967.
967.
Next,
For July, 2,453,780. 780.
53,780. Next,
Sorry, sir. Does July not have interest on loan?
this is it now. No, July. No,
Okay.
that one is no. It's not. There no interest on loan in July.
Okay.
Yes, you are not in class. No, the loan was obtained in July. They'll pay the interest August, September, October, November, December. So please, you can check the record is on the YouTube, right? So what do you have here?
2,092,310.
92.
2 million and that is 092.
Okay.
310.
92,000. 310.
310.
Okay, that's fine. So 1% of this will give us the bank charges, right? 1% bank charge. So what is the 1% of each of the months?
For July is 24,537.8.
24,537.
7.8.
Okay, 0.8. Okay, you can approximate to this should be
Okay.
8, right? Okay. Next,
The other one is 20,923.
923. Next,
22,56. 529.
530.
2256.
22,530.
30. Okay. Right? That is 1%. 22,530. Okay. That's fine. Now, we move to the bank charges. We copy all this to the bank charges. So, bank charges. Oh, okay. 1% bank charges. So I can remove this 1% here since I've shown you that in my workings. Don't forget, any day, anytime you want to prepare a cash budget, this is the format. Your inflow, which is your receipt, minus your outflow. Your outflow will exclude depreciation and provision for bad debt. I've mentioned that in our previous lecture, right? Then when you subtract, you have your net cash flow. If there's a cash balance or overdraft, if it is cash balance you have in December, you bring it forward in January, you add it, you have your total closing balance. If it is an overdraft, you subtract it, right? You have your what? You have your closing balance, right? So in this case now, right, I think we are done with this part, right? So we can add all the, what is the total receipts or total inflow. So please add the total inflow for July, and the total inflow for August, and the total inflow for separate. What do you have?
For
Someone should
July,
Okay.
2127
2127
390.
3
2127 390.
390. Okay.
No, it's 2,127 2127.
Okay. Next,
Okay, for August, 1897
1897
460.
460.
Then for September is 1655
Okay.
200.
So that's fine. 1,655,200. Right? Class, this is your what? This is your inflow, right? Your inflow includes probably you dispose an asset, you have maybe you borrow money, you loan. Is that not so? Apart from your sales collection, your receivable, your fixed deposit, probably you make a big fixed deposit, you receive interest on what? On every deposit, right? And so on, right? Then you deduct your payments. Now that is why I said the total inflow, right? Minus your outflow. Your outflow is your purchases, your payments, So we need to look for what is the total of this for each of the months. Total outflow. So for each of the months, okay, I'm waiting for each of the months.
For July, 2,478,318.
2,000,000
478,318.
318. Please, someone should confirm that. Please confirm.
September 2275
September 2275
75 497.
497. Please, someone should confirm the figures, please. Next, figure, please. Figure. Don't forget that is this your payment from this part, right? From this part.
For August, 2,113,233.
2 million, sorry, 2 million,
113,233.
233. Now, can you see you can see the format, the simple format I gave. Now, this is your total outflow, right? Your total outflow, you can just use E to represent it. Then, the difference between your inflow and your outflow, you need to check. Do you have a deficit or a surplus? And that is one of the objectives of preparing a cash budget. You want to know what will be the balance. You know you are forecasting for the future, right? You want to do a budget, and don't forget that budget is usually at the beginning of every year. You do a budget that you are projecting that, okay, this is what your outflow. It will enable you to adjust your cost, and that is one of the aims of budget. Can you see it? You have your net cash flow, right? So we need to subtract the outflow minus the inflow. So we have net cash flow. So I can close this, right? I can close this, right? So I can have net cash flow. That is A minus B. A minus B. So we don't have, we will have positive net cash flow or a negative net cash flow. Coming, the system is low. Oh, I'm not supposed to say. Okay, so let's check. Please subtract. Now, when you look at it now, you can see that the July is higher, right? The July is actually higher, is greater. Is greater. The outflow is greater. It means that they will have a negative cash flow. Is that also? They will have a what? A negative cash flow. Is that also? In fact, throughout the period, they will have a negative cash flow. Can you see it? Please confirm. Can you
Sir.
see it?
Yes, sir.
Okay. Okay. So it is possible, right? It is possible that they have, it is possible for them to have negative coming, negative cash balance at the end of the period. Like this, yes. Okay. We need to accept this person. Right? So please subtract it. What is the difference? What is the negative balance? Quickly.
For September, minus 620.
September, July, August, September. Okay. Negative 2,
620.
6, okay, 620,
297.
297.
Sir, for July is
Okay.
negative 3 for July, negative 350,928.
August. August. So, July for August. What do you have in August? What do you have in August?
Please help us to scroll up so that we can see the inflow.
Okay.
You have 215 minus 215,773.
Okay. Minus 215.
773.
723.
773.
773. Please, you need to go and confirm these figures again, right? Please, you need to confirm this figure again. If, right, you need to confirm this figure. Yes, someone should confirm all these figure, right? By adding them, if we have the same thing, then probably when you are doing your personal study, you can revisit it, you can calculate it again, right? So there may be a mistake in the process of getting the figures, right?
Sir, please,
Now,
sorry, sir. Can you come down a bit to see that dimension of bank charges, please?
okay, that's fine. So you can confirm again, right? Are we good? Class, are we good? Can we move on?
Yes, sir.
Okay. Okay. That's fine. If that is correct, we can check it back again, right? On all these things. So now don't forget that. Let's quickly go back to the question, right? Where we will have what is it called? The cash and cash equivalent balance. Can you see the cash and cash equivalent balance? 1,050,706 captured. Have you captured it? Right? That is the cash and cash equivalent. And what is the formula? The format given to you, right? A minus B. You have your net cash flow. Then the cash balance. You can see you are given a cash balance. That cash balance could be maybe for the month of June, right? Which will be brought forward in the month of July. Then you add it to your net cash flow, you subtract it. Depends on what you have in your net cash flow. You have your closing balance. This is the simple format you need to know under the what? Under the cash budget. And you should understand the interpretation, right? Interpretation of the question first, right? It's very what? It's very important. Now, you can see the way we battle, or we were analyzing all these things one after the other yesterday, right? In our last class. So it is what it is. So what do we have? Net cash flow. Then we can say this is opening cash balance, right? Which will be for July. This is the cash balance. Can you see it? It is positive. Now, as it is positive now, right? When you remove it, you already have negative first. Now, when you remove it, I know you should have a positive. When you remove it now, right? When you remove, because you have a positive cash balance, it is not an overdraft. Now, when you subtract it, what do you have? This will be your closing balance.
699,778.
699,778. Class, the closing balance of July.
Video.
Class, thank you. The closing balance of July, right, will be the opening balance of this. So we can come here and put our opening balance, right? So when you still subtract, okay, sorry, it's positive, right? So what do you have?
484,005.
484,005. So the closing balance of this will be opening balance of this. Right? So here you have negative, right?
Yes, 136,292.
Thank you. 136.
136.
Okay, 292. Okay, that's fine. Class, distinguished professional colleagues, this is the closing balance, and this is what you will use to make your decision. That is, the company will have a negative balance in the what? In the month of September, right? This indicates that the breakable Nigeria Limited should reduce its outflow, right? Its outflow in order to have a cash balance at the end of September, right? You could advise the company, because the question could go further that, okay, advise based on what? If they have a negative balance at the end of the period, you could advise them that they should reduce their payments and see how they can be able to do what? Be able to satisfy their customer, right? Once you satisfy your customer, you have more what? Revenue. However, the payment is very important, right? Look at the payment, what? The outflow, look at the payment structure, so that they can be able to have a surplus or a positive cash balance. A possible cash balance indicates that the company is somehow liquid, because they have a cash balance that they can use to meet up with some short-term obligation, right? And that is the end of this question, right? Distinguished professional colleagues, so are we good to go? Or you have question? If you have question, you can mute your mic and ask your question quickly. If you have question, unmute your mic. Okay, May 2015. The someone should send the Pathfinder to the platform. May 2015, question 2. Okay, now let's check examiner comments before we go so that you will know. What if I can decide to bring this in skills level? Can you see the solution? Okay, you can't see it. Can you see it? No. Can you see it? No, I guess no, right? Okay, that's fine. Okay, let me quickly read the examiner comments. The question tests candidate knowledge of preparing a cash budget. About 60% of the candidates attempted the question, and candidate performance was far below average, with only about 35% of them scoring 50 and above of the marks allotted. The major pitfall of most candidates was inability to differentiate between the cash and non-cash item as instructed by the examiner. Candidates are therefore encouraged to carefully study. Now, can you see? Now, the one that we want to solve now, the question that we want to do now is another what? It's another bottleneck, right? Because we need to analyze, we need to agree, we disagree, we agree, and what? We also disagree. Can someone send it forward the question to the platform? May 2015. May 2015. Question 2. Hello. Hello.
Hi,
Hello,
sir.
sir.
Please, can someone send it, please? If you have it, please share.
Now the class will end in 40 minutes.
Yeah. That's all. Thank you. That's fine. Listen. Ah, now don't send the question. Okay. Oh. Tolulope.
Ah,
You said you are still looking for the question, Abi? The Pathfinder. I've sent it. Okay. The class will end what? Ican question. Question 2. Okay. Ozombodu, Abi? What is the name of this company? God. Naibo, sorry. IB Nigeria Limited, right? IB Nigeria Limited.
Oh, Zamba, by the way.
Wait, yeah. Pronounce it.
Oh, Zamba, by the way. Now we go call her.
Samba by the way, I don't understand. Ozombodu. Ozombodu. I beg. Any name you like, you use. IB Nigeria Limited is 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 a company that is into buying and selling of plastic containers. The company is financed by a capital of 15 million inclusive of reserves in a mix of 30% and 70% debt and equity respectively. Class, this company is financed by a capital of 15, right? And this capital of 15 million is inclusive of 30% and 70% mix. And what is the 30%? It means that the business is being financed by debt, which is 30% of 15 million will be financed by debt. 70% of 15 million will be what? Will be financed by what? By equity, respectively. Now, the company has been in trading business for the past 6 years and has consistently adhered to its corporate policy. Its corporate policy on sales, purchases and inventory management. Purchases and inventory management, right? The company's policy on sales is to ensure that sales are collected as follows. Cash sales is 40% of the month sales. The balance of the month sales is to be collected in the month following sales. That is 30 days in the month following sales. Right? The balance okay. The balance of the month sales is to be collected in the month following sales. The policy on purchases is in agreement with suppliers' policy. Is in agreement with what? With the suppliers' policy, which is to pay for all suppliers in the month following. You pay for your suppliers, your purchases, right? In the month what? In the month following. We did not even read the required, but that's fine. The company stock policy, right? The company stock policy is to reserve 30% of the month purchases as closing inventory. So which means that the closing inventory will be calculated as the 30% of the month purchase as what? As closing inventory. The following information is available monthly. Additional information. The company purchased a motor vehicle in July 2013, which was paid for September 2013. You purchased in July, then you paid in September 2013. The cost of the motor vehicle is 5 million. Annual depreciation for the motor vehicle is 2%. The cash balance as at 31st December 2011 was 4 million. That is the cash balance. The company's salaries went and expenses were paid in the month they were due. Require. Prepare a profitability statement for 2012, 2013, and 2014. Prepare a cash flow statement for 2012, 2013, 2014. Determine and comment on the liquidity ratio. Current ratio for 2024. Complete the GL win. Total marks, 20 marks. Now, class, when you want to prepare a profitability statement, your profitability statement is in line with your normal profit or loss statement. Class, picture profitability statement as your what? Your normal profit, what? Your normal profit or loss. So, your profitability statement will be the sales minus your what? Minus the cost of sales, right? Minus the cost of sales, you have your gross profit. Your gross profit minus your expenses, right? Minus your expenses, you have your profit before tax. If there is tax, but there is no tax here, right? So you have your profit, and that is profitability statement. Then the next one is cash flow statement. The cash flow statement is your normal cash budget, right? Is the what? Is the normal cash what? Is the normal cash budget. Your inflow and your what? And your outflow, right? Now, we need to start with the profitability statement. Profitability statement. Oziogodu, right? Nigeria Limited. So this will be for how many months? How many years, rather?
3 2.
Class.
3 years.
Okay. 2012. 20, is it 2012? Am I correct? Okay. 2013, 2014. So your Naira sign is also very important. Your Naira sign is very what? Is very important, right? Your presentation matters a lot, please. Now, we move to the question. We start with sales. Don't forget that we're told that we should prepare a profit statement for 2012, 2013, and 2014, 10 marks. The monthly sales, this is for monthly sales, right? Now, when you have to prepare your profitability statement does not include 30% will be paid in this, 60% will be paid in this. No. Your profitability statement, right? Your profitability statement is your normal profit or loss, right? Now, sales. Let me pick from this part, 2012, right? This is monthly sales. When you multiply this by 12, multiply it by 12, 4.2, 4,200,000 times 12. What do you have?
400,000.
Okay. Sales 400,000. Next, multiply the next by 12. What do you have? If you don't know, you just go and use monthly. Multiply this one by 12. What do you have quickly?
57,600.
700.
57,600. Why I will not buy this working is because it's our normal working, so I don't need to stress myself one stress like that, so you can do that. Right. We multiply by the numbers of months. That is what gave us the sales. So yeah, when you multiply the last one, what do you have?
8600.
86,400. Right? So the next is your cost of sales.
Yeah, 86,400,000.
Cost of sales. The cost of sales. So I can use this one as workings. Okay. Your cost of sales, you need your opening inventory. You add your purchases, then you less your closing inventory. Is that not so? Now, don't forget in this paragraph, we're told they make mention of inventory. That the policy on purchases is in agreement with the supplier's policy, which is to pay for all suppliers in the month following. That is suppliers, purchases, right? We are not there. We are not in cash budget or forecast. We are in profitability. We need the opening, the closing, and the purchases, right? The company stock price, the company stock policy is to reserve 30% of the month purchases as closing class. 30% of the month purchases as what? Month purchases, month purchases, month, not year purchases, month, right? As what? As closing inventory. So I will do my workings. So this is the monthly purchases, right? I just need for these 2 months, right? I just need for the 2 months. No, I need all. I will need all. I will need all because of. Don't forget when you want to do your workings, you need all the information given to you. The month start from which month? Which month?
2010.
Which
2010.
year? 2010. Sorry. The next one is what? 2011. Okay. Sorry.
11.
Right. The next one is 2012. Yes. 2012. Okay. So if this is your monthly sales, right? If this is your monthly sales and 30% will be for the closing inventory. Closing inventory will be 30%. So what is the 30% of this?
600,000.
Next,
720,000.
next.
40,000.
You said
840,000.
840. Next,
So that one is 720, not 220. 720.
720.
Yes, sir.
Next,
The next one is 960.
960. The reason why you need to use all the month, all the year given to you, because of in the month, you need to do some adjustments, right? So what is the next?
1 million. 1
1
million
million
440,000.
440.
440.
Then opening. So if you want to determine your opening inventory, you can tell me. If you want to determine your opening inventory now, how will you determine your opening inventory? Opening inventory.
That will be the purchases minus closing event.
When question says that if you want to get your closing, it will be 30%. Just follow what the question says. So 20% of the month purchase as closing. We've gotten that, right? Now, what will be
30%,
your opening inventory?
30% of the closing inventory still.
Oh, okay. Oh. In a simple way, in a simple way, in a simple way, the closing, the closing of this, the closing of this, the closing of this is opening of this. Is that not so? Is that not so, class? Are we together?
Yes, we are together.
Yes.
For those who work in a manufacturing company, right? Need to adjust this part. I have my reasons for keeping all this for a purpose. No? Okay. 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 In a simple format, right? See, what you have in your closing inventory, right, will be the opening inventory of the following year, right? You just like this fee now is like the December of 2020 will be opening in 2021, right? So we've calculated our opening, the closing, is that also opening and the closing. Now, don't forget that this is the monthly purchase. All this thing is monthly purchase. Now, what is your yearly purchases? Multiply by 12. I don't need to do the workings now, class. I don't need to do the workings of that. Just multiply by 12. Is that also? Do we need that?
Yes, for
Yes, yes,
remembrance.
sir. Yes, sir.
Okay. I'm done with this part. Right? Now, yearly purchases that we use in my profit or loss, you use yearly sales. Is that also? Then multiply by what? I'll just say multiply by 12. 12 months. Oh, multiply, nextly, multiply by 12. So when you multiply by 12, what do you have for each of the months?
24 million.
This is 34 million.
24.
Okay, 24. This is, let me copy this one. Uh, this is 24. Next,
28 800.
20.
28 800.
Next.
33 600.
33 600. Next.
38 400.
Next.
57 600.
You say
57 600.
57.
57 600.
Huh.
57 600.
Okay. Right. So I can do my cost of sales. I've gotten my yearly purchases, my opening inventory. Please, your opening inventory is not yearly. It is always monthly. Monthly. Your closing of December will be opening of January. Right? Please don't go and do the mistake and multiply the closing and opening by 12 and you say, oh, it's for 12 months. Oh. Okay. Please understand that. It's very important. Now, the cost of sales for each of the year, we can have, I even need, how many years? 2012. Say, why they even this? First myself, 2012. That is what I need, right? Opening, inventory. Please, your profitability statement does not involve this will be paid 30 days or 50 days. No, it is normally your profit statement. Right? Please take notes. Opening, $960. Add your purchases. 2012, 2013, 2014, closing inventory. What is the closing inventory? 2012, 720.
840,000. Size 840.
2012, 840K.
Yes, sir.
2012, 840. Closing. Okay. Thank you. 960. 1,440,000. Class, give me the cost of sales quickly. Can never see this method in that Pathfinder. Right? That is why we are different, right? We are next gen. Don't solve question according to what is
3480.
okay. Coming.
33.
Just hold on. So what do you have?
33,480,000.
33,480,000. Next.
38,280.
38,280. Next.
57,120.
67.
5, 50, 57, 57,
57, 120.
120, 20,000. Yes.
That is the cost of sales. So we can copy all this as the cost of sales. So this will be what? We'll just say less your cost of sales. The person have question should need to ease our mind, please. So what is the gross profit? If you have question, just mute your mic and so what is the gross
Okay,
profit?
gross profit for 2012 is 16,920.
Is what? 16.
16,920,000.
Next.
Next one is 19,320,000.
Next.
Next one is 29,280,000.
29,280,000. What happened, Sarah?
Okay, please. I'm confused in that cost of sales we just did finish now. Like, the reason why we are using purchases, we are using for the 12th month. Why for the inventories we are using just a month?
You cannot multiply. Your inventory is on is on the monthly basis. Your closing inventory of January will be opening inventory of February. It's like a cumulative already. Your inventory is on a monthly basis. I've explained this again now. That the closing inventory of December, that December closing inventory, it is what they have at the end of the year. So why do we want to multiply by 12 again? You are overstating your inventory. Because that closing inventory, you might have less, you might have subtract, you might have do this and that during the year. So why do we want to multiply by 12? Your inventory is on a monthly basis. Your closing inventory of December, it is opening inventory of January. Is that also? Now, the
Yes.
closing of January is opening of February. You can see the way it is, right?
Yeah.
Till the
Yes.
last year.
All right, I get you. Thank you very much.
You're welcome. Right? The next one is expenses. Let's check the question. Monthly cash expenses, right? And we are doing for a year. Multiply it by 12. Just give me the one of 2012, 2013, and 2014. That is what I need. 2012. Multiply it by
Now, which
12. What do you
one?
have?
Expenses.
What do you have?
The first one is 28,800,000.
28,800,000 or 2 million. Is it 28 million?
Sir, is it cash expenses?
Yes, now
Yes.
it's not your expenses. That is the monthly cash expenses you pay out. Is that not so?
Okay, 2,400,000. Sorry.
288.
Um, 2,880,000.
I don't want to put cash expenses. It is your expenses. 2,880,000.
Okay, 880,000. Then
Next.
for 20, the next one, 3,360,000.
Next.
4,320,000.
So which other expenses do we have there? Salaries and rent, right? That is
Yes.
wages, salaries. I just need someone should just be giving me figure, right? Please. Rent. So I will have my net profit quickly.
1.2 million for rent. For rent.
Okay, for rent.
Yes.
Next.
All 1.2 million
Okay.
as well.
Okay. That's true. That's true. The fixed cost. Right. Your salaries.
5,160,000.
5 million. Don't forget they are multiplying by 12 to get the monthly. Next.
5
Same as
million
2030.
The same, Abby.
Yes.
Yes,
Last.
5,750,000.
5,700,000.
So what is our net profits? What is our net profit? Net profits. If you have question, mute your mic.
For
Net profit.
2012, we have 7,680,000.
7,680,000.
So please, I have a question.
Next. I'm coming.
Hi.
Okay,
9.6 million.
9,600,000.
9,600,000.
600,000.
600,000.
9,600,000. Right?
Yes, sir.
Oh. Have we considered the depreciation? We do not even. Why are we in the east now? We should have checked this additional information. You can ask your question. Oh, depreciation is part of the expenses. So what was the depreciation? We're told that annual depreciation for the motor vehicle is, please always check your additional information. Annual depreciation is 20% of the motor vehicle. So I can go down and say my workings, depreciation, annual depreciation, 20% of the motor vehicle. What is the cost of the motor vehicle?
5 million.
5 million. So what is the depreciation?
That's 1 million.
1 million.
Yes, sir.
Okay, that is the depreciation. Is 1 million for the year. This is for the year. Now let's quickly go back to the question. I'm coming. If you have question, I'm coming. Now, we're told that the company purchased a motor vehicle in July 2013, was paid for in September 2013, which is still the same year. Is that not so? You acquire it in July, you paid it in what? In September. We don't have problem with payment. We have the challenges in the date. at which they acquire an asset. The annual depreciation is this. Class, depreciation is charged on a yearly basis. Is that not so? Depreciation is charged on a yearly basis. You purchase an asset in July. At the end of the financial year, which it could be December, right? At the end of the financial year, which is December, you account for the depreciation. Now, from July to December, how many months? From
6
July
months.
to December is how many months?
It's 6 months.
Thank you. It's 6 months. So therefore, the depreciation from July to December will be 500,000. Class, because you will overstate your what? You will overstate your revenue. You will overstate your expenses if you recognize all the 1 million in that period. But I think you purchase it in January, you can use the 1 million as the depreciation for the what? As the depreciation for the year. So therefore, from July depreciation, July to December of that year, $1 million divided by 6, right? You could say times 6 months divided by 12. What do you have?
That's 500,000.
Yes,
500,000.
500,000. They purchased the asset where 2013, Abi. So they will charge this in 2013. While in 2014, they will charge the full depreciation because it will be for the full year, right? Now, this will be 500, while the next one will be 1 million for the full year. So the person that have question should unmute his or her mic.
This is not under depreciation.
Person that have, if you have question, unmute your mic.
Sir, please, can you explain this depreciation part again?
You did financial reporting,
Yes,
right?
sir.
You did financial reporting. You purchased an asset February. At the financial year, which is December, for instance, the company financial year is December. Will you charge depreciation for the full year? No. It's the month you charge from the month you purchase the asset. That is when the asset will start depreciating. Is that not so? Right? However, it still depends on the company policy. Right? From February till December is how many months? That is what? 11 months. 11 divided by 12 times the cost, right? Times the depreciation, right?
Sorry, sir.
Okay, I'm still
Is
talking.
it the
I'm still talking. Okay, I'm still talking. So you purchase an asset February, right? When you purchase an asset February, will you charge depreciation for the whole year? No, you have overstated your expenses if you do that. The normal accounting principle, right, is for you to say, is for you to say from February to December is how many months? That is to December is how many months? 11 months. So 11 divided by what? 11 divided by 12 times the depreciation times the depreciation. Is that not so? If you say depreciation is straight line method, when you calculate the depreciation, you cannot charge the O because depreciation is at the end of the year. At the end of the year, 12 months. And if it is not complete 12 months, it means that you purchase the asset either at the middle or before the end of the year, right? So that is why when you purchase the assets February, right, you start charging depreciation from that February, right? From that February to December is how many months? That is about 11 months, right? On a monthly basis, right? On a monthly basis, you could, or yearly basis, you can have 11 divided by 12 times the depreciation, right? You have for the what? For the full year from that February, not for the full year, for the half year from that February down. Now, that will give you for 11 months depreciation. Then, if you want to look for the monthly depreciation, monthly, now, I'm not talking about this, what we're doing now. I'm just telling you in practice. So, you want to look for the monthly depreciation, you can divide it by 11. If you divide it by 11, it will give you the what? The monthly depreciation. But we are not doing monthly here, we are doing yearly. Is that not so? Do you understand, Juliet? Do you understand?
Yes, sir. Thank you very much, sir. Thank you very much.
Let's see, go ahead. So, we are good with that. Now, what is the profit? What? Give me the profit figure, please, quickly.
The first one is 7680. Okay.
Next,
The next one is 9,100,000. 9,100,000.
that's what I'm trying for 4 months, right? It's not charging. 9 million. What do you have?
100,000.
9 million what? 100.
100.
Next.
Next one is 17 million.
So this is the profit. So we are done with this part. And it is how many marks? 12 marks. If you know, you know, right? Your profitability statement will always come the usual way. The usual way. But understand, you can see, I can lock this question. They lock it from this part. If you don't know, you will go and multiply this inventory by 12. Then you miss it. Right? You miss it. Your inventory is on a monthly basis, class. Now, if this is established, the next question, please. So this is A. What is the B part of the question? B.
Prepare cash flow statement.
Prepare cash flow statement. So that is where we will now take cognizance of all those 30% will be paid this, 50% will be paid this. But when you are doing your normal profitability statement, it does not involve 20% will be paid. It is your normal profitability, right? Then your cash flow. The question, the prepare cash flow could be for cash flow statement. It could be for cash flow statement. It could be cash budget. It could be cash flow statement. So you should know that, okay, this is what you want to do. You should know what you want to do, right? The first one is what? 10 marks. Imagine you have 10 marks out of 20 marks, right? Now, the next one is 6 marks. Cash flow statement. cash flow statement. Cash flow statements. What is the name of? Right? And this is not complete. Profitability statement for 2020 for the year for the years you can use this 2023 2012 2013 and hey this is your presentation. 1 mark is very important. Okay, we'll do our workings again, right? So let me shift this one down. Okay. Our workings. Okay. Where should we start from? Okay, let's start from the sales before we move to the purchase. Or let me start from sales. Anyone? Should I start? Let me start from the sales and the purchase, right? So that when you understand that, I believe we understand others, right? The purchase. What did they talk about the purchase? The purchases in the question. Can someone read that part? The part of purchase. What happened?
Okay, so the policy on purchases is in agreement with the supplier's policy, which is to pay for all supplies in the month following.
Okay, thank you. In the month following, right? In the
Yes,
month
sir.
what? Following. The question is, what is the yearly purchase? I want you to pay attention to this part. See, if you don't pay attention, you just miss it, right? You miss it. Pay attention, please. The yearly purchase. I want you to understand something here. I can lock this question, and that is why you see the performance there, right? Now, if this is the purchase, right, and out of this, this is for this is for a whole year, right? Now, part of this class, part of this will be paid. How many percent will be paid? How many percent will be paid? Was it mentioned? I'm coming.
No,
Okay. Now, the policy on the purchase is in agreement with the suppliers. Now, what it means is that in the month following, now, which means that if they purchase all these things monthly, class, they will not pay it immediately. If they purchase all these things, right? All those things, right? If they purchase this monthly, they will not do what? What they will do is that they will not pay. They will not pay them in that month, class. They will not pay in what? In that month. And don't forget, this is the yearly. We want to know the purchases at the end of the year. Then you cannot have outstanding, what we call outstanding, or you can name it payable. or outstanding payable. Outstanding
Class will end in 6 minutes.
Okay, 6 minutes. That's a very good one. Thank you for the notification. Oh, so where are we? So outstanding payable, right? Payable. Now, those on the monthly basis is now what it means is that part of the total, part of it here, they are here to pay it on a monthly basis. They are here to pay. That is why it is outstanding. That is why they said the supplier, which is to be paid for all the suppliers in the month following. So you give me the figures of all the monthly purchases, right? Give me the figures from all the monthly purchases. Class, do you understand my explanation? My explanation here is out of the total purchases, there are some outstanding we need to remove from the purchases. That is, we are here to pay them, but of which we will pay them in the month what? In the month following. Don't forget that the outstanding is inclusive in the 24 million. Is that not so? So what is the monthly purchases? Quickly, give me figure.
2 million.
2 million. Yes.
2.4 million.
2.4 million. Next.
2.8 million.
2.8 million.
3.2
Next.
million.
3.2 million. Next.
Then 4.8. 4.6 million.
4.8 million. Right? 4.8 million. Now, when you
Then
subtract
4.8
this,
million.
okay, 4.8 million. Good. Now, when you subtract this from this part, class, it will give you expected payments to suppliers, right? This is what we expect to be paid, right? Expected, I will use it as expected payment to suppliers. Class, let me explain again. The total yearly this is 24 million. We want to get what will be the total payments at the end of the period. That is why you are preparing a budget. What is the total payment to suppliers? What is your total sales collection? What is your total payment to suppliers? Now, what is the total purchases? If this is the total purchases, don't forget the one of monthly will not be paid in that month. You remove it because it will not be paid. Because it will not be paid. The annual already, it is inclusive of the monthly, right? You remove it because it will not be paid in that month, right? That is why we say expected, right, to suppliers. So what is the difference? Give me figure. What is the difference?
$22 million.
This is 22 million.
22 million.
Next.
26.4 million.
26,400. 36,400. 400.
26,400.
36.
Yes, sir.
Which one?
26.4.
26,400.
Okay. Next.
Next one, 3,800.
30.
800.
800. Next.
35,200.
Next.
52,800.
Now, don't forget, these payments will be paid in the month following. Class, this payment will be paid what? In the month following, right? Payments made, payments, right? Payment in the month following, that is 30 days, right? This will be paid here, 2 million. This will be paid 2.4 million. This will be 2,800,000. This will be what? 3.5, 3,200,000, 4,800,000. Okay, class. So let me put this 2015. Hello, class. Now, class, what happened here is that the total purchase for the year, you want to know what is the total payment to suppliers. This is the total purchases. So these total purchases, we are the monthly of 2 million from inside, this monthly is inside the 24 million. We are here to pay it. Remove it. What is the expected payment to suppliers is this. Now, we need to pay this money in the what? In the following month. So when you pay it in the following month, we give you what? Because it's 30 days. We give you the what? The total payment made to the what? Suppliers. Is that also? Now, what is the total payment made to the suppliers? Total payment made to the suppliers. I don't need, this is 2200, right? Let me put less here. Okay. So when you add this together, what do you have? 28 what?
2,800.
Next.
33,200.
Next.
38 million.
Next.
56 million.
66. 56.
56.
56. Okay. So why this remain days, right? This figure here, we are here to pay it. Payments. We will pay this in 2015. Is that not so? We will pay this in what? In 2015. So this is what we have as the total payments. Total is a very technical question. You need to understand this, right? Total payments to suppliers or payments made to suppliers. So you unmute your mic and ask your question quickly. Hello.
Yes, sir.
So we are good, right?
Yeah. I want to drag it back a little.
No, you can't. Oh. It's just this part.
Is that right?
Yeah. It's just this part. right? It's just this part. So what you just say what you want to say. Just say it. Go on. Just say it.
It's on the cost of sales.
No. We've done that one. I've even explained. I've even explained it. So you can maybe when you watch the video, you can check it, please. Please. Thank you. So
Hello, sir. Hello, sir.
please go ahead, please.
Please, can you throw more light on this payment 30 days again?
Are you with the question?
Yes, I am.
Okay. Did you see the company policy here, which is to be paid for all suppliers in the month following? It means that these monthly purchases, they will pay it in the month following. In the month following. That is 30 days. What is the month following? What is the month? What is the year following 2020? Is what? Is 2021. It's 2011. The one following this, right? They just make it a yearly. Just leave the year. Monthly, right? 2 million will be paid in the following month or year. 2,400,000 will be paid in the following. 2,800,000 will be paid in following. Do you understand?
Yes, sir.
This is it. We are here to pay this money, right? This is what we are here to pay it from our total purchase. Then payments, you need to make it, you need to make the payment according to the question in the month following. You make this payment in the month following, make it in the month following, in the month following, in the month following, in the month following. This 2 million will follow this. 2.4 will follow this. 2.8 will follow this. 3.2 will follow this, and 4.8 will follow this. Do you understand?
Yes, sir. Thank you.
Okay. The next adjustment is the one of purchase. Now, the question is, what is the interpretation of this? It means that, okay, I will get there. So this is the total payments to suppliers. Then we need to do the usual sales. Now, sales. Sales. Now, we need to establish, just like the way we did purchases, what is the total sales? What is the yearly sales? Yearly sales. Multiply by 12. Let's get our yearly. I guess we've done that before, right? Let me see if we've
Yes,
done
sir.
that. Okay. Oh, we did not do others, right? Just give me again. Just give me so that. Mm,
Okay. For 20, okay, for 2010,
yeah.
okay.
Multiply by 12. What
For
else?
2010, that's 4,800.
4,800.
Yes.
Next.
For 2011, we have 43,200.
43,200. Next.
Then 5,400.
Next.
57,600.
67.
57, 57, 57,
Okay.
600.
Next.
We have 86,400.
86,400. See, I think being in this question, we're not given yearly on months. The question would have been very easy for us to solve, right? Would have not, you know, one thing about performance management is that sometimes, because of examination condition, you may not be able to like think like that. But however, if you have been solving question, you should know that, okay, this is what you should do, right? I'm still going back to the purchases. The yearly purchases is 15 naira. In that 15 naira, there are some suppliers, there are some payments you need to make to your suppliers. You are yet to pay it. That is the outstanding. Now, you remove it. What do you have? Oh, expected payment to suppliers you need to pay. And when are you going to pay that money? The old one. When are you going to pay? Is the month following. You remove, you pay it. You pay it in the what? In the month what? In the month following. So when you are paying it, you are adding it, right? Because it will becomes an outflow to you. Is that not so? That is why we're able to do what? We add it. So the same application we still do for what? The sales. The question will not, like, we may not, some questions may not be like this. Do you know why it is complicated? Because we're given yearly and months. And I can want to test your knowledge that, okay, the yearly, what is the total payment? We want to know. This is the purchases. We know. What is the total payment for the period? So that we will use it. We will use it as what? As an outflow. Now, purchases, sales, right? Now, let's quickly go back to the additional information of sales. Where is the sales? Cash sales is 40% of the monthly sales class. So what it implies is that out of the total yearly sales, there is 40%, right? I think it's 40%. Okay, 40%, right? For the 40% what? Sorry. 40% of the monthly what? Of the monthly sales. 40% of the what? Of the monthly sales. Now, I don't want to go through the stress of charging 40% of the monthly sales, then the balance in the following month, right? You can now subtract from the total. Now, let's use the way we did, what is it called? The way we did the purchases. Let's just do it like that, right? So then we will now say alternative, right? Or alternative approach, right? Alternative approach. So what is the 40%? Cash sales. Cash sales is 40% of the monthly sales. Of the monthly sales. And don't forget, your monthly sales is inclusive here. Is that not so? Hello, class. Your monthly sales is inclusive here. Is that not so?
Yes, sir.
Okay. So we can do it this way, and I have other method. Cash sales. What is the 40% of 40,800,000? What is the 40%?
60,320,000.
16 million.
320.
Okay. 40%. 15 million.
16,320.
16,320. Next.
17,280.
17,280. Next.
2160.
20.
2160.
2160. I know you have question, but just hold on. Okay, next.
2160.
Okay, what is the next? 2013.
23040.
20 what? 23040. Right? What else do we have?
Yes, sir.
Next.
34560.
34,560. That is 40% of 86,400. 86,400,000. 34. Right? Now, we're told that the balance will be paid when? The balance will be paid, the balance of the monthly sales is to be collected in the month what? In the month following sales. Class. In the month what? In the month following sales. And don't forget, let me repeat this again. This is the yearly, right? And this is the yearly cash sales, right? We'll do it in the other way around, right? That would be the what? Alternative. I'm coming, right? That would be the what? Alternative, right? Now, before I move on, Uzema,
You said you're going to do alternative, so I just want to see, because from the English there, it is clearly stated that it is 40% of. I don't think we should apply the 40% on this yearly sales.
total year, the total what is in this place, is it not inclusive of monthly? How did you arrive
It
at this
is.
figure?
It is.
Okay, I'm coming. Don't worry. Don't worry. Let's just move on. Mm, mm, okay. Okay, that's fine. So the next one is the credit sales. In the following words, the credit sales will be in the following words, in the following months, right? The credit sales, or we should do it in the other way around, okay? Okay, alternative. Let me just make provision for that one, right? So 60%. So it will be 60%, right? 60%. I have two methods of this, right? Let's use this first. So credit sales class. So which means that in a year, because we are using yearly, right? In a year, 60% will be paid in the what? In the month what? In the month following. Is that not so? In the month what? In the month following. 60% of 40,800,000. What do you have? 60% of 40 million. What do you have?
24.8.
24.
24.8.
Okay. 24 point what?
24.80.
Okay, 24,480. Okay, 24,480. Can someone confirm that?
Yes, correct.
24.
Okay,
24.80.
okay. Okay, next.
25,920.
25. Okay.
920.
920. Okay. Now, the way we did purchases is that the total purchases is this. Then we are yet to pay it, which is the one of outstanding. Is that not so? The outstanding. Now, this credit sales, we are yet to do what? We are here to receive the payment, right? Then we will now still charge, just like the way we did this. It will now be in the what? In the following, right? So just give me figure. What is the 60% of 43,200? I'll still explain it again. 60% of 43,
25,920.
okay, 25,920. Next,
30,240.
next,
34,560.
34,560.
51,840.
60 what?
51,840. 51,840.
Okay, 51,840.
840.
I know, Uzoma, I know you will like that second
Sir.
method. Don't worry, just relax, right? Just relax. Okay, now, just like the way we did the outstanding payable purchase, I make reference, but the only difference is that we say, okay, we just use the monthly. Is that not so? But here we are using the full year. Is that not so? Right? Then the cash sales, right, of 40% is this, the credit sales of this. Now, don't forget that we now go back to your question, Ozema, that says that in the following months, what will be paid in the following months? The sales. Now, this indicates that these sales here will not be paid immediately. Is that not so? These sales here will not be do what? We will not pay it what? Will not be paid immediately, but it will be paid in the what? In the following month, which is 60%. Will be paid in what? In the following month. Now, why do we have to do it that way? I'm coming. Right? In the what? In the following month. The balance of the month sales is to be collected in the month what? In the month following sales. So what is in the month what? Following sales. Right? Now, in the month following sales, or should we use that method first? I think that one will be fair. Let's check it out. Let's check it out. If that will work. Okay, let's check it out. Cash sales. Cash sales minus we have the credit sales, right? Credit sales, right? So we can roll it over. Okay, I'm coming. Cash